Howdy, howdy. Hope everyone's having a good evening. So we can get some folks in here. Good evening, good evening. What's up, Austin? What's going on, y'all? Sonny, what's going on? It's Cam. What's crack-a-lacky, Cam? Alex, what's going on? Mully, Jeffrey, what's going on? Howdy, howdy. Oh, there you go. Good stuff. Good stuff. Jackson, I hear you. I hear you. Good stuff. What's up, Zach? Alex, Merry Christmas to you, Beast. Appreciate you, brother. What's going on, David? Nick, what's up? What's up? What's up? We got a great guest this evening. I'm just waiting for him to. I'm surprised you're still wide awake. It's not that late. It's not that late. Old man doesn't need to go to bed yet. Here we go. Here he's coming in. Should be loading up here momentarily. What's going on?
What's going on, bro?
How you doing, brother?
Good, good.
Good, dude. I really appreciate your time this evening. You and I have a lot that I would like to discuss. So many things that you and I both agree on that we were chatting about beforehand. So, a couple topics in mind. But before we get into that, first of all, Merry Christmas to everybody. Happy holidays to you all, folks. And then, my good sir, can you provide me a introduction for the folks who do not know you here?
Yeah, what's up? I'm GD, part of Team Bull Trading. And yeah, so I do my own thing. OBR is a great friends of mine. So amazing people over at OBR.
I appreciate you. I appreciate you. You mind giving us a little background on the way you trade, how you invest, all that think or swim action behind you?
Yeah, so I do a lot of things, but mainly I came up of doing long-term like investing, and that's really what I started doing, just investing my money in the S&P 500, blue chip stocks. And then as I kept getting into it and learned how the market fluctuates and, a lot of things about the market in general, I started, playing options. I started trading, and I found my own style in the market. I trade small caps intraday, and then I just, play my long-term positions. And that's basically all I do.
Well, there's a lot there to unpack.
Oh, of
And
course. And I'm down to go through it all too. The long term, short term, whatever you guys would like to see, man, I'm down with it for sure.
oh, we're already getting all kinds of comments. We got a comment right here that you're beating me out on the stash. I guess I need to thicken it up a little bit.
No, man. Nah,
But
yours looks pretty good, man. I'm not gonna lie.
I need to get rid of this scruff. This shit keeps growing in on my face. I can't stand it. But let's I'd love to pick your brain a little bit about the long term first, and then I'm sure there's some guys that really want to know about your short term
Of
as well.
course, and this live I was planning on sharing some setups that I'm actually looking for. So if anyone wants to look at them and partake, you can.
That's awesome. That's awesome. Well, so let me ask you a couple of quick questions about some of your long term things that you're doing, what your outlook is, and then I'd love to see the setups. That would be incredible.
Yeah.
Um, for your long term. Now, I know there's a lot going on with the different variants, and I know there's a lot going on with interest rate, Fed. What are you looking for in regards to? Let's say we open up 2023 with a definitive correction. Market falls 10%. What are you looking for when the market's down at those levels?
I'm definitely searching for the best deals possible. I mean, I'm really looking for the sectors I want to look for, and particularly right now, I'm looking at uh, banks. I'm looking at financials. I'm looking at. I really like e-commerce. I love the e-commerce. Amazon, Shopify is one of the ones that I'm going to show you on the technical setup, and a few other ones that I really like right now. But in the future, I'm saying a little cash heavy right now. Like I said, the last time we talked, I said I don't really hold that much cash, but right now I do have a lot of cash that I'm holding on the side, and that's more of because the market is unpredictable, right? We don't know if it's going up, down, sideways, wherever it's going. We don't know, but it's better to be prepared, not surprised. So I'm holding a lot on the side, and I'm ready to bounce on an opportunity when it presents itself.
That's awesome. I'm the same way. I'm anywhere from 30 to 50% cash at all times, depending upon just how well the market's doing, or whether I think I'm about to get, the best deals in the world. My Black Friday is when the market's down 10x%, right? Or 10+%. So I'm all for that. I think that's fantastic. And being a little cash heavy right now with, a little of the uncertainty in the market and the direction and a little bit of the volatility, I don't think that's a bad play at all. I think that's fantastic,
Yeah.
actually. Because the market gets hit, you already know you're well positioned cash wise to get whatever it is you think you need. So in regards to some of the e-commerce, are you looking at Shopify? You said you were looking at Amazon. What about the banks?
Okay, so actually a few months ago, I picked up Visa, MasterCard, because they were, I mean, I just looked at the technicals, to be honest. The RSI was oversold, they were cheap, and no one wanted them. And now they've actually bounced back up. MasterCard actually bounced pretty good in the last few days. And I'm making my money's worth out of it. I'm not shooting for home runs, just getting slow and steady gains, and they'll compound at the end. So,
well, the credit services have been hit recently, quite hard, right? Visa, MasterCard specifically, and then Amex has been very volatile. For another one that I look at credit service wise, and then also the fintechs. I hold a decent bit, and I was very much considering getting some MasterCard, but instead I moved over to the PayPal and the Square side for longer term. And gosh, they've been getting absolutely annihilated in the past 2-3 months.
and I want to say something, because a lot of people, PayPal was one of the ones I was watching. I did buy a little bit of PayPal, but I actually changed what I thought about PayPal. And if I could, let me just show you really quick, because
Go ahead.
let's get up PayPal here. Let me get a stand or something for you guys so you guys can see. Actually, I'll just hold it. That's okay. So I got a little chart here, a little handy dandy chart. Let's pull up PayPal. All right, so I have levels on it already here. Let me get this light out of the way. It's shining on it. Okay, here we go. So we can see a nice support around this, 175 range. We bounced it a couple times, here. We're back down to it, right? But one thing I do want to point out is, like, PayPal is one of those stocks where, it had such a huge increase from 2019 till now. It's the evaluation of PayPal is picking up. You know what I'm saying? Like, people are realizing it wasn't worth $310, and it's pulling back heavily. Now, we are consolidating here, which is a great sign, and I love that. That's why I actually bought a little bit here. But I don't think it's one of those stocks where it's going to, go right back up to 310 to the all-time highs again. I think we might have another, it might grind it out, or it could do that. I'm not, I don't know exactly what's going to happen, but this was one of the ones where I was really bullish on. And when I bought it here, I'll probably going to scale in more, but I'm going to wait for this to confirm either an uptrend or a downtrend here. Because one thing I do want to explain to you guys is that when we're looking at technicals here, obviously we could see that we had a nice clear downtrend. Now we hit a support. Now we're stuck in this point of consolidation. And this is, consolidation is when we're hitting resistance and support, and we're just bouncing between that area. So from here, I'm either looking for a trend to be broken. I want it to see either break down, or I want to see it break above. Now, once we can break through this 180-day SMA line, that's when I'll start adding more heavy, because it's confirming that it's going back in the trend I want it to. So when it confirms that trend, then I can feel way more confident that hey, it's going to recover. Maybe it does have a chance to get the 310 all-time highs again. But for now, either way, I'm scaling in, but I would like to see the direction first.
Now, just a question while you're looking at PayPal. On one of your videos, I saw that you were using a tool that you were dragging from the top of a peak down to a support that showed you the percent drop of
right.
How far it fell. What tool is that on Thinkorswim?
So that's just the drawing tool. So if we go here, 310, and we drag it down, we can see. I can't see from that peak, but if we drag it down, from the previous high was 35%, but if we go up to there, it's probably 40.
Okay, all right. Well, see, that's something.
That's a good drop, right? If we can, a 35-40% gain is amazing. I mean, I'm looking for 10. I'm scaling out 10, 20, but I mean, if you're holding long term, this is a good deal. And like I said before, I definitely think that when I bought this, I was very confident that we were going to bounce up here. But I also think that we popped off in the, very quickly to a point where we could see more downside. And I'm okay with that because, this is a good long-term company. And like you said, you have patience, you're able to scale in, average your price, you'll be just fine.
Yeah, I agree with that wholeheartedly. And there's a lot of people who are not really interested in waiting the time that you and I are fine with waiting, right? Because we're looking for a big entry, and we're allocating capital to something that we want to see 10 to 30% return out of, and we're
Yep.
okay waiting for that 10 to 30% for 3, 4, 5, 6 months, which is a lot of people want to pull the trigger sooner or later, or they want to day trade it, and there's nothing wrong with that at all. Shorter term gains or a breakout trade on PayPal could be phenomenal, could be very beneficial, right? But
Absolutely.
I'm with you on that entry for sure. Is there anything else you're looking at?
Oh, yes, 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 yes. Let's look at Shopify. So, like I said, I like the e-commerce because I think in the future, 5, 10 years outlook, e-commerce is probably the biggest sector that I think, it's just becoming such a real life thing right now. Like everyone's using e-commerce, right? Amazon, it's just like who's gonna go out and buy something anymore? Everyone orders the stuff on Amazon. Like it's just such a big thing, and Shopify is right behind them, right? So, they're the second biggest company, and in fact, let me see. I have some notes that I've written down for Shopify because when I do this, I look at fundamentals too. I'm not just buying something because it looks good on the technical side, but
Right.
it has a 25% drop off all-time highs, which is nice. If we pull back, 25%. And one of the biggest e-commerce companies in the world, and it's increasing its revenue subscription every quarter significantly, and that's just such a great thing to see because, man, like it's just showing that this is something that is going to be used and going it further and further every quarter. It's just becoming better, and it's something that more people are translating to because if you think about it in the modern day, most people aren't really using or going to the store anymore. Like, and most people want to run their own business and stuff like that. Shopify gives you a platform to do that. So it's just something that I think it has tremendous growth.
And
And
are you looking at Amazon right now, right?
no, I'm looking at Shopify.
Okay, Shopify. All right. Okay. So sorry. We're looking at Shopify right now, and then I think our boy here is going to be going over
Yeah.
Amazon.
So yeah, I wasn't planning on going over Amazon, but I can.
Oh,
But
okay. Sorry.
so just for the people that are watching, this is on a daily time frame, and as you can see, there's 2020 there. So we have hit this point, and this is a good point that I just want to say. You can see this gray rectangle here. We touched it once. This was a resistance. Then we broke resistance. Then we came back down and pushed back through, hit resistance again. Now we broke this resistance. Now it's using that resistance, that previous resistance, as a support level. So
Yep.
now we are bouncing here once, twice, 3 times, 4 times, 5 times. So this is a good piece of evidence that we could say, hey, here is a good place to buy some because look, even if we do fall and we break this support, we're getting it at a discount, right? We could always average down, we could always average up. So we're sitting here on a good support level. I feel pretty confident that I could put in, a decent sized position, and if we break above, if we start uptrending, I add more, and if it goes down, I'll add more as well. But we are able to see here, this is a possible 25% if we can go up to all-time highs potentially. So this is something that I'm willing to risk, and in my trading style, this is something that is a no-brainer. I'll buy this all day.
That's awesome. That's fantastic. And I know Shopify is doing well. E-commerce in general is doing well. There's a lot of people, like you said, that are moving over to having everything provided to them at their front door.
Right.
I know a lot of people who are going and getting their groceries off of Amazon. I've done that before, so I don't have to go out so that I can focus on my work. Everybody wants everything automated, which some people, I can't blame them. Other people are going to be doing the traditional way. It's okay, right? But we try to go with innovation, right? That's what I look for, and that's what I know you look for as well. And moving forward, people are really becoming, it's really going to be in high demand for people, for companies that are providing different services, providing different products at your doorstep, food, etc. Holiday gifts, everybody's ordering off of Amazon. I'm sure Amazon's making billions of dollars this quarter just because of Christmas and Thanksgiving and Black Friday, Cyber Monday. And same with Shopify. So,
Yep. And like, this is not all I do. Because this can get a little boring, right? A lot of people that tend to watch on Instagram and tend to watch on anywhere really is that they like to see like the option plays. They like to see the flashy stuff, which is cool. And I do that type of stuff. I do that daily actually. I day trade pennies, and that's pretty fun. I do it more for entertainment than rather than making the money part of it, because it's just like something where I sit down, I get into it. It's like it's fun for me. So one play that we did today that produced amazing, a great play today. We alerted this today actually, and it was something that I partaked in. This is SOPA, and I had a previous runner of the other day. Tremendous gain. I mean, it popped off on news, and then that day it went crazy, going up all the way up to 180%. And that's something you can't take your eyes off, right? You see that happen in the penny world. You're keeping eyes on this for the next week, because traders cycle back to these plays that are able to move and have explosive moves. These traders never leave them alone because they know the potential. So as you can see, we kind of went flatline for one day, and then here we are. They cycled right back, and we called it out today at literally the perfect point at 960, which is literally the bottom here, which is pretty crazy. But yeah, I partaked in this. I didn't partake at the 960 part, but I did partake when I saw the volume come in right in the beginning here. We saw this nice candle up, and it's game time when you see these little dudes pop off like that. So I scaled in here, and I took my profits around a 50% gain, but man, it was just an amazing trade. If you held it to the tippity top, we could have made it around 75%. It was an amazing trade. And those are the fun trades that, just keep you on your toes, and it's fun. We do those too, but it's all about how you can, handle all your stuff. Like you said, you're more of a longer term guy, and so am I, but it's always good to mix it up. And hey, it's just part of it. And I just wanted to show you guys that because I thought that was pretty cool. It was, a great trade. One of my better ones in the last couple weeks. So.
Well, that's excellent, and I love the setup. And your conviction was there, whole 9 yards. There's a lot of people who are trying to day trade and do exactly what you just went over that you did very, very well. For day trading, for me, I am extremely conservative, and I'm a creature of habit. I don't take day trades often, but when I do, my stop losses are tight. I go into that day trade and I have a lot of conviction. I'm using a larger position, so the stop loss is going to be tight. I'm either winning immediately and I'm going in the right direction, or my stop loss hits and I'm on to doing something else more important.
Yeah, and you're better than I am, man. I'm a little bit of a degenerate. I'll let things play out sometimes, and I'll get beat up. And I think it's all part of the learning process as well. And I know my limits. I've been doing it for a little bit, so sometimes it especially when you play pennies like that, man. One thing I've learned is obviously they're moving with high volume. Some of those pennies are volume leaders all around the board. So, they can go one direction very quickly. And, sometimes getting scared out is a good thing, and sometimes it's not a good thing, because that one bounce out could be, that one drop down could be people trying to scare you out of it, and then it pops back up. So, and it goes. So, definitely something to learn. It's a big learning curve for the pennies, for sure.
Yeah, I've never, not in my entire life, have I ever traded a penny stock. And the way that I handle my trading, my day trading.
Oh, you're completely different.
Nope, I couldn't do it. You couldn't pay me to trade a penny stock. You couldn't even give me capital to trade it. I don't have any interest in doing it. I've never traded a meme stock in my life. My method of trading, and I'm very happy with it, is more monk style than anything else. Like
yeah. And you know what? that's something that, if you can find it, right? If you can find the style that works for you, stick with it, man. It's really, truly, like you said, you're doing very well with it. And, I mean, you can't complain. I wouldn't go to pennies either. I do pennies only for fun, for the fun. So, I mean, I do make some money. Don't get me wrong. I've had some great weeks, had some bad weeks, but, it, all in all, it's pretty fun. And it's a learning curve, right? Because I never was in the pennies either. And I just started, watching the news, finding, these small companies that are running off news, having volume, the whole, everything that it really takes. And, learning, right? You learn about how their sympathy plays, how, like, DWAC ran 200% off Trump, but these other stocks like PHUN are just sympathies to the same thing on Trump. So it's the Trump theme. You know what I'm saying? So it's so many different things you can learn and so many different ways you can trade. So just all in all, it's fun, and it's great to learn it.
A lot of people have been saying it. A lot of people were saying it, especially when Trump was in office, that there was a Trump train going on. And I think DWAC was actually the first legitimate, definitive Trump train, and that was insane. I just sat on the sidelines and just watched that thing go all the way up and then right back down. So
yep. They take the stairs up and the elevator down.
Yeah, oh yeah, it's the way it goes. It's the way it goes. I don't know. The elevator, it took quite an elevator up.
It did get halted up like 8 times.
Yeah, and then someone cut the cords to the elevator and just,
Dude, I couldn't believe it. I seen it at 60, and it was just halting up like $20, and I was like, "There's no way. There's no shot it keeps going." Oh, dude, I seen it go right in front of my eyes, and I sat there, and I was like, being the person I am, like, damn, I wanted that one. I wish I could get that one back.
Yeah, I the way that I probably should have traded that, just exactly like I do my other day trades for my triple leverage, for SPY, for QQQ. I should have just locked in a tight stop loss and just let it go, started incrementally taking profits, and then all the rest of the runners just slap a trailing stop on it and leave 30% position in there and then just walk away for the day and just leave it alone. If it doesn't fill, who cares? Don't care.
Yep. And that's something like, these pennies can fly like that. And it's a fun game for sure. You get a lot of emotions, a lot of stuff. I'm not condoning to do this in any way. Don't be like me. But I like it. It's fun. So.
No, take this fine gentleman's long term.
Yeah, buy the S&P 500 and then turn your phone off.
Yeah, turn your phone off. When you and I were chatting a little bit beforehand and a couple of our other one-on-ones, when you said you had a couple of questions for me, is there anything strategy-wise, spread-wise that you want to chat about?
Yeah, so you were talking about triple leverage and you do that on SPY, triple leverage stuff. So what about do you do that with large growth stocks or a blue chip stocks, or do you stick to the leveraged?
Are you talking about covered calls, covered puts?
Yeah, covered put. Yeah.
Yeah, I've got positions in AMD, Microsoft, NVIDIA. Different volatility will create different premium, right? The larger trading range, the larger premium we're going to be getting due to IV. So the triple leverages are incredible, and they're probably the safest option, in my opinion, just for my trading style. And, if you guys look up TQQQ or SPXL on Robinhood or any of the other brokers, big old warning sign, oh, this is triple leveraged, dangerous, but hell, you guys trade AMC. So, I mean, pick your poison. So, yeah, I love those, right? They're literally just a triple volatility version, a 3x volatility version of the S&P 500 and QQQ. In my head, all that means is SPY falls 5%. That means SPXL falls 15%. So that means when SPY moves that 5% back up, I'm going to make 15% on SPXL. And I'm legging it accordingly, and I'm being super conservative, so I don't care about that additional volatility. That's what makes me my money. On the flip side, both in security form and triple leverage for the covered calls and covered puts, AMD, NVIDIA, they're volatile, so they're creating a lot of premium, but I have to be more patient with that volatility. On the covered call side of things, I gotta wait for NVIDIA to get back into the 330s, 340s before I cover my calls again. just because of the way my strategy works. I want to make sure I'm covering way out of the money and far out and getting a lot of premium in return and equity return if my 100 shares are exercised.
Right.
And on the covered put side, I want SPY to fall 5-10% so I can get covered puts at an extremely low price. Chances are I won't even get exercised for those covered puts because I'm going 6 months out, and I'm doing SPY at, if I want to do a covered put for SPY, I'm doing it $350 a share 6 months out, or $400 a share 6 months out. And then for SPXL, I'm doing $80-90 a share, getting $2,000 a premium when the market falls. That's and TQQQ, or sorry, $2,000 for TQQ, $1,200-1,300 in premium. Market runs back up, cut those naked puts, cover my calls. Sorry, cut the sold puts, cover my calls, wash, rinse, repeat on the upside and downside. And 90-something% of the time, I never get executed. Good God, exercised. Excuse me.
No, that's brilliant, man. It really is, because you're protected, and you're not just in one side. You're playing both, and you're being conservative. But also, it's so smart because you're making money. You're not just sitting there and you're looking at it like, oh, I need this to go up or down. Who cares? You're gonna make money either way. So it's just a brilliant way to do it, and it's very interesting. Very interesting. I've never really met anyone that trades like that or invests like that, which is awesome. I love it. I think it's brilliant.
I appreciate that. That means coming from you specifically, that means a lot to me. I really appreciate
No,
that.
that's good stuff, man, for sure. It's just like, you don't really hear people like that really trade like that. At least I've never have. I mean, around the trading, like, you see people, and you don't see many people that trade like you, and that's for sure. You see a lot of people with the pennies. You see a lot of people with the buying option calls or puts, whatever they are. But you don't see a lot of people that are protecting yourself like you are. And that's important, because a lot of people tend to go into the market and they don't know what they're doing. And they try to figure it out, which you have to. It costs money to learn this. And doing something like you are doing is just, you're able to participate in the market while playing both sides, and also not stressing about if your one stock you're holding is going to go up or down.
Right.
So it's just brilliant. And if you're new, it's something where you need to figure it out. Like you'll play a couple of option plays, you'll win some, you'll lose some, but at the end of the day, you want to find consistency. So it's more of just like, it's more finding your own thing. And that's something that I want to learn. Like, truly, I do want to learn the spreads a little more deeper, because that's a brilliant strategy.
I appreciate that very much. It's taken me, just about 2 years of absolutely banging my head against a wall with every form of options trading, every vehicle I can use in the market. You've mentioned credit spreads. We just talked about covered calls and covered puts. There's debit spreads. There's naked calls. There's leaps. There's poor man's covered calls. There's so many different vehicles that have a lot of different circumstances where you can deploy them and deploy them well and conservatively, which is what I care most about. Like you said, the biggest thing for me is, on any given day, I have parameters and I have trend lines and I have supports and resistances that I look at. And if the S&P 500 is at all-time highs, I have a whole list of things that I can do that will make me money right at that very moment. SPY falls 5-10%, I have a whole list of things that I can do that will make me money right in that very moment. So, and that's what I'm mostly concerned about, is I'm trying to make sure that annually I'm getting a good and consistent annual percent return. And your financial advisors, they're offering 7%. Some of these hedge funds can barely even do 11-12%. Right? I think that's crap. I really, I'm not saying that I'm outperforming that every single year, but that being said, I haven't been in the market near as long as they are, but I'm starting to get more concentrated, and I'm using more income producing option strategies that a lot of these hedge funds and major institutions, they're using shares, right? They're just doing equity. Maybe they'll buy some puts for downside protection. Every single 100 increment of shares that I have, I cover them with calls at all-time highs. And if the call that I get is $2,000 worth of premium 6 months out and the stock falls, I'll make 50% and I'll cut it, make $1,000 in profit, bank that, re-inject it in at that level, what have you. And if I've got multiple increments of 100, I'm just re-injecting multiple grams of that 50%, like TQQ or AMD, for example. Excuse me. So that's how I'm running it. Market falls, don't care. Market runs, don't care.
And that's some good stuff, man. I really do enjoy that. I mean, it's like a craft, right? Like what you're doing is more of like, like you said, you have your levels mapped out. You're looking at what you need to look at, and the best part about that strategy is that it takes 5 minutes to look at your levels. It takes 5 seconds to look at it. Like legit, you can go on there, at whatever time of the day and go back, look at your levels, be like, hey, this is the level for the support, resistance. All right, I'll look at it tomorrow. Whatever the market does tomorrow, you can do what you have to do and really just walk away, go on with your day. So that's something that, could apply to a lot of people, as that, most people can't, spend their whole entire day at the computer. So
I'm with that 100%. I'm sorry. I'm just looking at that last comment. The guy said I coughed off camera, not just knowing thing like COVID goes through the camera. I was coughing off camera to be respectful of this man. I'm not about to cough on camera in front of all.
How about with the recent talk about COVID and the new variant or whatever, what do you think is going, like, what do you think our market is heading right now? A lot of people are saying, we're going to be bullish, Christmas, it's Christmas, whatever, we're going to go up. But, what's your outlook?
Well, I think the majority of the broader market's really priced in the variants and the variants to come. We're countries doing it, the administration, whole 9 yards. I'm not going to get into the vaccine and everything, but administration, Fed, whole 9 yards, CDC, they're trying to get as many people, vaccinated as possible. And that's I'm messing up my phone here. They're trying to get everybody squared away. They're just trying to diminish the variants and COVID and the cases and the whole 9 yards as much as possible. And after, hopefully down in the future, this thing will stop mutating whole 9 yards and we'll stop worrying about it. But I think the market, other than maybe a little gut check, maybe a little 3 or 5% pullback to a new variant that could be doing X, Y, and Z, I think largely the market's priced it in pretty comprehensively. Right. What I'm more interested in seeing is what happens during the first interest rate hike. That's what I'm both excited and intrigued about.
What they say, we have like three. We have. I didn't mean to interrupt you. What do we have? 3 of them?
3.
Yeah.
Yep. 3 hikes, and we've got empirical data showing us that the stock market doesn't really like interest rate hikes, and as usually perform more to the downside, and sometimes in an extreme way. That being said, pulls the market down. That means everything's on discount for 3 months. Sack up. You'll be fine.
Yeah. And there actually is another stock that I looked at. I don't know why I stopped where I stopped. I don't know if I went over or not. I was looking at Target as one of the ones that I'm actually invested into Target pretty heavy. But it's showing a good opportunity right now, and I think that it's just one of those ones where it's like, man, if you're patient, I really just think this is a good company in general. Wait, let me go to.
What's it trading at per share right now?
It's trading at 217.
Yeah.
So we've had a high of 268, and we've took a downtrend. I think it's like 25% off highs, around there. So around 25% off highs, and we had a great year, right? Like Target, Walmart, they've had tremendous years. So this is to be expected. But one thing I do want to note is that we're sitting on a previous resistance. If we can see right here, there's previous resistance turning into a support. And, if we go down to our indicators, we look at the RSI level, we are breaking down below 30, that indicates that we're oversold. And, we're at 26. So this, to me, this is a good point to, scale in a little more here. For me, I'm a long-term holder for Target, and I'm a believer in Target. So, I bought some more, and either way, if we fall more, I would like it because I'd just buy more regardless. But I think this is a good deal, and they have great numbers, and they're just a great company. I think if I can remember correctly, Target had 25.6 billion in revenue just last quarter. So
Woo!
that's just something that to keep in mind. Like it's just something that I don't know. I think it's a great company, and I'm bullish on it for sure in the long term.
Dude, I think that's awesome. I've seen a lot of the banks issuing some very bullish price targets of Target. And the 280 range, 300, 310 range, I believe was the most bullish I saw. Maybe it was 320, but some very bullish price targets. I've actually, before I stopped trading credit spreads on individual securities and stopped trading options other than covered calls and covered cash secured puts, I completely stopped trading credit spreads and leaps on individual securities. But when I was trading credit spreads on individual securities, I was running them on Target. And every time Target got around that support line that you were showing in the recent past couple months, it would run right back up off that support line, and I was cutting for 20, 30%. And my profit available to my max risk on those credit spreads were phenomenal because I was getting it at 220, 230. And I was going into the 260 to 280 for the credit spreads, about a $20 spread, but I was getting $8,000 of profit to $1,000 max loss. So it was an 8-for-1. I was gung ho.
Yeah, absolutely.
As soon as it bounced, I was up 30% at $8,000, and I'm just thinking, okay, well, I'm going 6 months out. I'm still getting this kind of bounce. I love it.
Right, right, and there's plenty of opportunities in this market right now, especially. I feel like we have a good opportunity to play some of these, especially as we rally into Christmas. This week has been phenomenal. One thing I didn't like about the market is I'll show you if we look at SPY really quick. One thing I don't like about the market conditions that we were in, but I don't think I wouldn't consider it anymore, but I hate it how, let's go to like a 5-minute time frame. No, it doesn't show it good. Let me go 15. So like if we would run in the aftermarket, which was annoying, and then we would drop during the day. Like we would have these runs in the aftermarket, then drop, and then we'd hit run. Like it was so choppy, it was just so hard to predict what direction we were going in. So when it's like that, we've had this consolidation period around this, a high of 473 to, and staying on the support of around 450. So it's something where like when the market doesn't pick a direction, it's just hard to trade, and it's hard to really, with not your strategy, but with someone that's just holding, equity in a position, it's hard to, be able to trade this because the market doesn't know which way it wants to go. So, but right now it looks like we have a couple green candles up. I do believe we have a good chance of making all-time highs again in the current moment. I do think that we do have a good chance of that. And so I definitely think we could be continuing up. And if we do continue up, then I think, these plays will pay off. Just, even like ones like I was looking at today, a little more risk involved here. But, DraftKings, right? It's died. It went from 74 down to $29. And it's dead, right? And, not a lot of people want to touch this. But this is something that I'm looking at because, if I could capitalize off that one, a 1 day candle, just even, it will be worth it. And, if we go back in time, we see this was resistance, then it broke through, and now it acted as support once, twice, almost 3 times, and then now we're back at it. So, here's another example of, a stock that's on sale. Obviously, it's dead. The valuation picked up, and really, obviously, it wasn't worth $74. So I pulled back, and now we're sitting here. And this is something where I'm willing to risk, some money because I do think regardless if you bought it here and bag, you were holding it, you were down for months. I do think this comes back up past 29 because DraftKings is one of those stocks that kind of caught that meme factor, right? That kind of caught that meme factor where like, people were on it and that's the reason why I had such a big rallies, right? Because people were trading it. People were saying it was going to go to $100, $300, $400, and it caught that hype. And when the stock has that type of potential to gather the hype, not to say this is, completely off of your tactics, but like you have to keep that in mind because a lot of, traders make the market too. And, when a lot of people can hop on one stock, it's important because it could make you money. And it's just one trend, one way to make money in the stock market too nowadays, right? Because you can go on, any platform and a million people are calling out a million different things. So just something to keep in mind. But we are sitting on support, and I do think this is not a bad buy zone. I'm not 100% bullish for sure. I'm definitely not bullish on this right now, but I do think if we consolidate and we break above and we start crossing these EMAs I have stacked up here, and we can make it up to this, SMA will probably be down here by that time, about the 40 level. I think that might confirm that we're going back up. So just to keep an eye out on it, and you can always scale in, scale out, protect your capital that way. So it's really it's up to you how you trade it, but I don't think this is something where I'm risking not that much for something where I could gain a lot. Say if we did have a rally, we could go up to, I could be making 150% on this back to all-time highs. So it's just the rewards there, but you have to play it right. And, you can't get scared either. You can't be, if you're going to try and, trade this for a 3 months, 6 month span, you can't be looking at the 1 minute time frame. You can't be looking at these tiny candles, see this one candle, be like, oh my God, it's dropping, I'm going to sell it. Like, you can't be looking at that, man. You have to be going, zoom out. When in doubt, zoom out. Look at the big picture. We're sitting on support, and there we are. Nothing to worry about. So we're chilling there. And there's another one I'm going to be giving to you guys, man. I'm like Santa Claus right now. We're going to look at Digital Turbine. This is one that I looked at too because it got
apps, baby, apps.
Yeah, apps. Have you traded that?
That was one of the stocks that had replaced my cybersecurity income for the last job I ever had back in December of 2020 via covered calls.
Wow. Okay, so we know a lot about this one. So this one here had a nice rally, obviously in the last year in 2020. And then we consolidated here. We're consolidating in this range. But one thing I would like to point out is trading support and resistance is so important. Like, this is such a simple strategy. We could see that this, was resistance, which turned into support. We bounced once, we bounced twice, 3 times. Here we are, 4 times. And we already started bouncing, right? We already started confirming an uptrend almost. And here, but this is still a great example of, we could be making back to the, back to all-time highs. We could be making, 70% here. So just playing off the technicals, we could be, onto something here. This is ticker APPS. APPS. So, and one thing I like to dive into is like, right, when a stock has a sell-off like this, right, we've seen one large candle, and people are wondering why. Why is it dropping 26%?
I think that was earnings.
Yeah, it was earnings, but their earnings weren't bad actually. What happened was they dropped because they acquired 2 different companies, one being Fiber, it's called. It's like a digital company. And so market, people in the market don't like to see that, because what happens is they're spending a lot of money. The company is spending a lot of money. And that always results in a bad reaction to the market. So we see this, ridiculous sell-off. I'm seeing, I don't even know. I've never, like, this is crazy actually. Like, this is like, 2 weeks of straight red candles. So that's a reaction that us retail traders have to take into consideration. We're looking at it here. That's something that you like to look at. And I smile when I see this, because that is just something where overselling. It's over exaggeration here. They're making this too much of a big deal. This is not as big as it sounds. So it gets down to this support, and I feel pretty confident here. And I took positions today, but I will be gathering more, because this has great opportunity, and I'm willing to hold this for a while and, ride it back up, down, wherever it needs to go. And, if we do break the support and go lower, I can, further evaluate if I want to, average down, or, I cut it and, look back at it later. So just always having your plan is important as well.
Apps is single-handedly, and this is just, again, guys, this is my opinion, Apps was one of the best, if not the best, stocks I've ever traded my entire life, utilizing selling puts and selling calls on 100 share increments of equity. And guys, apps, my average cost for apps was in the 40s. So that means all it took me was about $4,000 and some change to get the 100 shares. And if I saved money up and made money trading while I was working, that $4,000 could come every couple months. And if I was doing really well, or I caught one of those major upswings that GD's showing right now, I was able to, I could double my shares, and then I could sell them. I could sell them at 190 or 80, double the shares, 100% the shares, and then sell puts against them to get them back and be netting all that premium with keeping a bunch of cash in my account, not even using the cash.
Brilliant,
So
brilliant. It really is.
I was making, per 100 shares of apps, I was making four to $600 a month per 100 shares on premium when it was at its most volatile, which GD's showing you right now.
Right.
So,
And one thing I like to say is that, this isn't a bad company either. You're not buying something that's bad either. Cause, looking into their financials, I did notice that they have been profitable for the last 2 years. So
yep.
for a company to be profitable, it's just, just a great sign. I mean, who wants to buy a company that isn't performing well? So, to be profitable is just something, that's great. I mean, if you can be profitable, I mean, you're on the right path. So, it's just good. It looks good, and I do think that it has some more upside potential. So, something to look at.
No, absolutely, absolutely. I know. If I remember correctly, I looked at some of the institutional holders of apps, and I believe that apps is a pretty heavily held stock in regards to institutional money. So, but that being said, that means companies that are very institutionally heavy, most of those companies, big institutions, are not going to let fail, and they're going to set earnings estimates to make sure that the earnings are going well, relatively speaking. If the stock gets too high, institutions are going to pitch out some really hard earnings estimates. If apps doesn't receive those earnings well, doesn't outperform them, apps will fall. Even though apps is doing incredible with their revenue and all the other fundamental side of things, they'll short that stock down to the 40s, 50s again, and then they'll buy it right back up, and you'll see all that volatility.
That's what I like to say here is because we see this, and I love when I see this because I've made my best trades in ways of saying this is just an over exaggeration. People are freaking out for no reason. We're seeing red candle after red candle, and it wasn't even bad news. It was actually great news to expand and actually grow further as a company. It's just people don't like to see simple facts of them spending a lot of money on acquiring other businesses. And
Yep.
You're going to see reports like, oh, APPS acquires this company, spends this amount of money. Like, obviously they're trying to scare you. And like you said, they'll push it back down. Just like how we pushed it back down and we're sitting and, oh, lo and behold, we bounced off the same support we have for the last year,
Yep.
So, I mean, it's really not rocket science, but you have to be looking for these things unless you'll never find these opportunities because there's not going to be anyone that's going to be telling you, hey, apps is sitting on the support, go buy it now, because there's not going to, you have to find that. And, obviously our discords will help you find opportunities like this, but, either way, you still need to put in the work and, just a simple chart analysis will tell you a lot, tell you the story.
Yeah, you can utilize the fundamental side with apps. You can utilize the technical side, whatever you best utilize and whatever tailors to your goals the most. If you're looking for breakouts, might want to stick on the TA side of things, right? If you're looking for company fundamentals and you want to understand what you're investing in long term, might want to look at the fundamentals, right? The technicals will show you a lot in regard to trends and what it is that it's doing, in different time frames. But the fundamentals are what tells you whether or not the company's worth a damn. So,
and here's another one that I've been looking at too. I don't mean to keep talking about stocks I'm looking at, but Tesla. We have traded in a range, and I love when a stock trades in a range. And this one trades in a range all the time. If you go back, it went in a perfect range. Let's go back a little bit here.
I got something wild for you when you're done about Tesla.
So, I mean, if we can see here, it's trading in a range, right? We hit, this is a resistance, this is support, and we can see it bounces off, comes up, bounces off there, comes up, resistance, support, and then now we're just in this range. So, one of these things where I think Tesla there's so many eyes on Tesla, and you always have to remember that because when a technical, formation does form on a big stock that has a lot of eyes, most of the time when it confirms that breakout, it's going to go because there's so many traders waiting for it. So when there's that many people looking at it, it can go. So if this one, you know, if we come up to this resistance and one day we candle above it, I wouldn't be surprised to see another candle above. Or if we get candle below this, I wouldn't be surprised to see another candle, you know, big candle below that as well. So it's just always good to keep these, you know, little technical patterns in your pocket so you can look back and be like, hey, this is doing this. I have a good chance of this, going up, down, whatever. So it's always good. I'm watching this one for sure because I know there's a lot of eyes on it, and Tesla's a fun one. So go ahead, tell me about Tesla, man.
All right, so we're getting right on an hour here, but there's something I want to chat about with Tesla regarding some of the portfolio management side of things. I'm sitting down and I'm looking through all the past data of Tesla splits, what the premium's looking like, and I'm thinking to myself, okay, all right, well, let's take a look at this. I was looking at actually two stocks for this. One of them a little bit more risky, Tesla, not as risky in my opinion. But I was looking at two stocks for this theory, and the other one, I'm not worried. I'm not thinking it's going to split anytime soon, but the premium was absurd. I was looking at Tesla and MicroStrategies today, actually. MicroStrategies, if I go 6 months out, wait for it to return to previous highs, and then cover my calls $200 out of the money for 6 months out, it's a 20% return on investment and premium alone, which is stupid. But that's because of how volatile MicroStrategy is in correlation to the price of Bitcoin and everything else that they're doing. So, but on the Tesla side of things, here's some free game for everybody that's got a slightly larger port and wants to put this kind of money into Tesla. If you guys are building up a Tesla position or have been building up a Tesla position for the past 2 years, 6 months, whatever it might be, for me, it's been 6 months. If you've been building up a Tesla position and you're slowly getting closer and closer to 100 shares so that you can really start netting that out of the money covered call premium that Tesla really freaking provides, ton of premium, then you hold that. Tesla splits again. Let's say it does another 4-for-1 when it runs back up to 1,600. May not happen in 2023, but if I was a betting man, I'd say I'd be happening in the next year or so. Tesla will run back up in the 1600s, maybe 2000s, split again. Now you have 400 shares, and you just run 6 months out of the money covered calls. You're netting 15, 18% back in premium in 6 months, far out of the money. Let that thing run. If it exercises some of your shares, great. Now you have cash that you can put into covered puts against Tesla. If it were to ever fall, chances are not going to fall that far. So your covered puts never going to get exercised. So that being said, you're netting money on covered puts on the shares you sold at highs, and then you got another couple increments because you got a 4-for-1 split. You're just running premium on those, and you got more cash flow than a multi-million-dollar real estate portfolio. I don't know what you want from me.
No, that's. I mean, you gotta have money. You gotta have money to be buying, Tesla right now. But that's if you have it, it's a great strategy.
Yeah, I've been building my position since it was in the 500s after the last split. It fell hard. Got time building in the split back in the last split. Been building since the last all-time highs after we fell from that, and it's just been, I've been doing it for a while, but in 2 years after I split again, after I'm putting, as much income as I can into Tesla, I'm going to have a freaking triplex on steroids that's printing me out more money than any real estate, venture I probably could do right now. Just, everything's so overpriced, but I don't mean to target real estate, but this is how I explain covered calls to a lot of people. You put your down payment on the stock or the ETF or the triple leverage that you want, and that thing nets you a lot of premium and bearish protection on the covered call side. So it's with Tesla, I get so passionate about this because Tesla nets so much in premium because of the volatility. So if you're worried about the downside, next time it hit all-time highs, cover it with a super out of the money call, couple $3,000, $4,000, $5,000 of premium, maybe closer to $8,000. If it falls, you're going to make 60% on that covered call. Well, bam, you just took, and you're not actually down that much.
That's a strategy that, I mean, listen, it's gonna work. It's gonna work. I know it will. I mean, Tesla's gonna go up, and you'll be making. It's gonna go up. It's just that simple, and that's a good ass strategy, man. And I'm gonna look into it for sure. something like that for sure. I'm definitely going to look into it. And like I said, watch Tesla right now, man. When it breaks out one of those technical patterns, there's so many eyes on it. So many people love it. It's just like one of those things where when it does break out, you're going to see another green candle go straight up that day. You're going to see another really green day. And just, when you can find a stock like that, it's pretty nice.
Yeah, no, I agree with you. I agree with you on the TA and everything. Two of our head honchos, we got Logan and Austin that were running TA via Fibs actually on Tesla. This was before when it started breaking out. They were giving perfect levels, and then they literally to a set, which blew my mind, nailed the peak of Tesla. Tesla based on Fibs, everything else that we're showing you got multiple confluences, which is what Austin likes to say. And I removed a pretty large block increment right at the top, right at their fib level. And they came back down in the 900s, and I've been legging back into it at $200 cheaper per share. And I'm sitting here going, well, I'm glad they're doing TA for me.
Right.
So,
right. And I've unloaded a lot. I sold 11 shares through the course of the last couple of months out that 1200 level, because for me, I knew that run was coming to an end, because we see Tesla, and I'm just so used to seeing it, is that like it runs when it runs, it's going to run a lot. And you see when it starts to get exhausted, and you see the upper wicks come, and you see the sellers start to pop in, and that's where I'm going to take my profits. And I did, and now it's go time. It's go time again. I'm going to buy some more, and if I could get it cheaper, I would like it. But hey, I'm not complaining, because I already have a pretty cheap average. So
there you go. That's awesome. So the last thing I'll leave you with, and you can respond to this accordingly, but the only thing that I've got in the back of my head is we haven't seen a correction in the S&P 500. SPY falls 10%. How far is Tesla going to fall? I got to look back. I got to look back at the charts. I got to look at the last 10% correction that we had in SPY and see just what happened to Tesla. But different place, different market, different stability. So, hey, Tesla may not even really fall that far. It may fall 10%, just like SPY. Tesla might fall 25 or 30.
I actually like when Tesla falls, because it's like it moves so fast. I love when a stock moves fast, and that's just one of those things where it's like when it's down, like it's not going to be there for long. It's like it gets swamped up, scooped up, and people will drive it back up to the moon. It's like one of those things. I don't know. I hope it goes down. I hope it goes down more. It's more of an opportunity.
Yep. More it goes down, the better Black Friday gets for me, right? So, brother, I appreciate you, and I appreciate your time. We've actually been talking for a while. We've covered so much incredible information, folks. A lot of free game here, which is what we're trying to provide, which is why this incredible gentleman and I put our heads together every now and then and get on here and start preaching as much as we possibly can. I don't think too highly of myself in everything that I do, but I will tell you that I can do my absolute best to cut your all's learning curve. This gentleman can as well. And I've banged my head against so many different walls, so many different times, that sometimes after enough banging, I might just breach the wall a little bit, right? I might just get a little clear-minded, a little clear-cut with what I'm doing, a little black and white. And
yeah, it's all about just providing. This is fun. Try to help you guys out, and it's really just mainly just so you guys can watch, learn a little bit, maybe, and if you can take one little thing away from this, that's all we really wanted. So,
yep. I love giving people the aha moments. I've got into other lives. I've sat in there for a few seconds, and then I'll hear somebody pull out a trade idea, something that I might love that I would never consider unless I heard about it that moment. So if I can give some aha moments, and we can give some aha moments or some light bulbs, that's what we're looking for. That's what we're
absolutely
looking for. Thank you, man, for your time.
Absolutely, man. I appreciate you guys, and I appreciate everyone that's watching. If you haven't followed, OBR, make sure you go follow. And they're great people, great program, great education, and make sure you go show them some love. So thank you, guys. I appreciate you all. Have a good night. Have a great Christmas. Peace out.
All right. Take care, Beast.